Dr. Yang, thank you very much, I think, for this deep insight and really especially the situation that we have seen in China here. I mean, I think we have many examples around the world where, in fact, I could only fully agree with your yes answer in this context, whether it's, let's say, the relationship between India and Sri Lanka, or SAARC here in the region, NAFTA, maybe even the entire European Union, our European Union model in this context, what is happening in Mercosur, etc. But I think it's also another element here when you talk about tariff elimination. I think this really provides a benefit to all actors in the global value chains, as it, at the end of the day also results in offering better competitive prices, and in a certain way, the larger society is to benefit from it. Well, Andrew was kind enough to add a couple of words also to the second question. I'm wondering whether it's also a clear yes or maybe a no from your side.
I think it's yes and. Yes and. It's not, I think it could be about two, but I think it's yes and mostly. I would just say the trade toolbox has expanded enormously. So if we talk about RTAs, what in the world are we talking about? Look at all of them. And they really respond to the specificities of different countries and different positions. So if you want cheaper imports to enable your value chains to be more competitive, choose something that focuses on tariffs. If you think you have a comparative advantage in services, start looking for frameworks that focus on services, that focus on the digital environment. So you might focus on RCEP in the former case. You may want to focus on TPP in the latter case. You may want to go to WTO and start working on that plurilateral, because that plurilateral may actually help set the floor and set the groundwork. So I'd say that yes, there are a lot of choices, and you don't have to choose one over the other. Those choices are a result of thinking about who you trade with, where your trade opportunities are, and then how to construct that policy to get what you need from the specific agreements.
Thank you, Andrew. Maybe this helps to better understand why the negotiations on some of the sort of free trade agreements take rather long times. And if I look at the duration of, let's say, the negotiations between the European Union and India on a free trade agreement, I say that I'm not going to say it's mission impossible to be in the space program area, but let's hope that we will start again. And thank you for this important addition. You want to? Yeah, absolutely.
Just an additional, perhaps, tuppence worth on trade agreements more generally. We've done some work at the OECD. In fact, this collaborative work we did with UIBE as in this report we produced, which is available online, which is looking at the role of GVCs for development. And one thing we need to be careful about is basically having a spaghetti soup of, if you want, bilateral trade agreements, because when we look at some regions of the world where integration has thus far been poor, notably in Africa and Latin America, it's not through, if you want, a lack of the number of trade agreements. They have a plethora of trade agreements, and sometimes it seems that too many trade agreements or bilateral trade agreements can, if you want, cause, if you want, like I said, the spaghetti or noodle soup of a mix of regulations that becomes very confusing for exporters, particularly for SMEs. They might find what regulation is it I'm supposed to be targeting, and why does my regulation why does the standard have to change depending on who the partner is? So it's about having deep trade agreements, but with a plurilateral and multilateral way. And bilateral trade agreements, whilst they're better than nothing, you need to be careful you don't have too many of them causing noise.
I think this is also clearly expression or further explanation why it takes a little while to conclude them, but I think very important topic. Well, I'm going to come back to you just in a second, Sebastian, as we move on to question number 3. How can trade facilitation promote, coming to Sebastian, how can we really, how can trade facilitation promote the growth of global value chains?
Thank you. First, I think that we need to acknowledge that the participation of SMEs in trade and as exporters is normally very challenging. Therefore, the trade facilitation agenda for SMEs is extremely important because trade facilitation costs are fixed costs that normally hurt or are more burdensome for small and medium-sized enterprises than for big enterprises. So, if we are serious about fostering participation of SMEs on trade, both directly or indirectly, directly as final exporters or indirectly as suppliers for exporters, the trade facilitation agenda is extremely relevant. Also, I think that the trade facilitation agenda is relevant because it's about time, it's about cost, and it's about certainty or uncertainty when there is lack of trade facilitation. In order to be able to participate in value chains, the SMEs need to provide their inputs to the lead firms on a timely manner. Anything that interrupts the chain, the supply chain, will mean that the SMEs will have challenges in order to be able to participate as a reliable suppliers in the supply chain. So it's a matter of timeliness, and this is very important. It's a matter of cost, because if the trade facility, in order to connect to the world and to the supply to the lead firms, it is costly. Then, therefore, you as MSMEs, you are not competitive, and therefore you will not be able to participate. And it's about certainty, because we need to know exactly how much time it takes to connect to the rest of the world. And we have seen that in many developing countries, the problem is that many of the procedures in order to connect to the border are, in terms of time, not necessarily well defined, and therefore it creates uncertainty both in terms of the import of the inputs that are necessary for exporting, and as well for basically exporting in itself. Also, I think that it's very important to keep in mind that trade facilitation should be understood in a much wider manner than is normally understood. I think that normally it's associated to the trade facilitation agreement of the WTO, but of course the trade facilitation agreement of the WTO is a step forward in order to really go into the nitty-gritty of trade facilitation, but it's a limited agreement in the sense that it does not cover a number of issues that are very relevant in order to promote trade facilitation, such as, for instance, infrastructure, and more importantly, the involvement of a large number of border management entities and agencies which are not normally, or their main function is not to facilitate trade but to control trade. And therefore there is a big investment that needs to be done in order to bring this more wider definition of trade facilitation, which also should include the logistics supply chain. And I know that in the audience there are logistics supply persons that have responsibilities in supply chain firms that not exactly what I'm referring to. For instance, regulations that affect the seamlessness of the logistics supply chain, which are not necessarily understood as trade facilitation measure, would normally create barriers to access to connect the firms to the global economy. So I think that it's very important as well to keep this broad definition in mind. And I would leave it here, Mr. Chairman. Thanks so much.
Thank you very much, Sebastian. I think really a couple of very, very relevant and important remarks, and especially when I look at time, cost, and certainty, or rather uncertainty, having been in the corporate sector myself for many, many years, I can just very much refer to the challenge when you have disruption in global value chains, and you are not in a position to really complete a product because you have many actors involved. And I was just saying to Andrew, the Brexit discussions in itself are going to be an interesting test case if I just look at the Republic of Ireland and North Ireland, so to say, all the cross-border activities that are happening on, and some of you may really like a local drink called Baileys, how often this in the production process actually goes across that current non-existent border. Well, I would like to ask Rupa to give us her insight on that very relevant question.
So, when we talk about trade facilitation can be seen in a narrow sense, and we can broaden the horizon and bring in many other factors. So, in a sort of traditional sense, if you look at trade facilitation, we're really talking of streamlining, formalities, documentation, processes, etc., the administrative part of compliance. Then there's the trade enabling physical and other infrastructure. There is the whole issue of border and non-border agencies and how they coordinate with each other. Then there is the access to information, the transparency regarding, the regulations, fees, charges, etc. And also consultative processes in terms of involving various stakeholders to shape the trade policies. In a broader sense, though, if you look at many of the behind the border issues, like even if you take something like logistics, people often concentrate only on the port logistics, but then the hinterland connectivity and the whole transport related multimodal, all of that is extremely important as part of trade facilitation. Similarly, if you're looking at digital trade, then all the related communications infrastructure plus the regulations which affect cross-border trade also become. So I would prefer to look at trade facilitation in a broader sense, and I don't again see it limited only to GVC participation. It is part of improving the business environment, improving investments, trade in general. Now, if I give just some statistics, I think you would see why India is lagging behind in terms of GVC participation or trade participation in world flows. Time to export, for instance, border compliance, number of hours, 106, US 2. Cost to export, border compliance, 413, US 175. Time to export, documentary compliance in hours, 36, US 2. Imports, similarly, if you look at border compliance in hours, 283, US 2. Cost to import, 574, 175. Time to import, documentary compliance, 61, 8. I mean, that gives you some sense of the sort of unrealized scope to improve our trade procedures, formalities, border compliance. Now, we've taken a lot of initiatives in recent times. They will take time to have effect. But the point is that for MSMEs in particular, how much of that will really get through in terms of benefits, it's unclear. Because in some of the schemes, MSMEs are not able to really participate. The second is, in terms of access to information, MSMEs do have a more difficult time. So transparency issues will affect MSMEs more. So having more online portals, having, these sorts of forums where information is disseminated is extremely important. Regulatory compliance in terms of standards is also a more difficult thing for MSMEs. The overhead costs, the transactions costs, time, etc. are also much more for MSMEs. Navigating with all these different procedures, as well as negotiating with logistics providers, freight forwarders, brokers, agents, etc., collusion, rents, all of these, given the scale, are, so, trade facilitation, even in its narrowest sense, has much more severe implications for MSMEs than perhaps for the larger firms. Now, if I take the broader context of trade facilitation, I think services, we don't focus enough. We just focus mainly perhaps on the logistics part of services, but improving capacity, standards, efficiency across the board in services, given that services are there through the value chain. So whether it's distribution services, communication, finance, data flows, business support services. And that means if you take a larger view, you really have to talk about liberalizing certain services. You'll have to deal with regulatory reforms in many of the business support services, which actually contribute in a big way to value creation. And many countries have shown that actually business support services within the manufacturing value chain are growing in a big way. So if you don't have efficient business support services, you're not going to be able to have much penetration in global value chains. Similarly, aligning with international standards, you might need to get into mutual recognition of qualifications. Mobility restrictions may be very important, and they're particularly biased towards MSMEs. So again, many of these things, I think we have to, depending on the particular sector concerned, But a wider range of regulations have to be looked at, inclusive of the service sector. Also, if you look at the growing scope for digital and e-commerce trade, then that brings a whole set of other regulatory issues. So, whether it's about data protection, localization requirements, data server requirements, all sorts of things. And India has been very hesitant about getting into these discussions, but the time is right because, again, there are tremendous opportunities for MSMEs in the digital and e-commerce space. So, what I would suggest, I have really 4 points where I think MSMEs should step back and try to influence the government. One is, look at what the recent trade facilitation initiatives have done for you. To what extent have you been able to benefit? Try to assess and take it to government to see, what more could be done in this area. Whether paperless trade is really happening in the way it's supposed to, and have you benefited? Are you able to really, take advantage of the single window clearance or the fact that there is more coordination across the different standard setting bodies? Has it really benefited you? So that's one. The second is, of course, looking at the various services and to what extent they are adding to your costs and services facilitation. In the FTA context, because trade facilitation is an agenda, again, how do you synergize some of your interests with the trade facilitation dialogue there so that you can get into the regional production networks? So looking at RCEP, looking at some of the bilateral agreements in our Look East policy, and even in the context of India-EU. And lastly, in the e-commerce and digital space, maybe pushing the government to participate in the discussions. I think this is a good time. We should not lose this opportunity. We should shape the agenda because it could be in the interest of our own MSME segment.
Rupa, thank you very much. And, I'd just like to pick up on the sort of demonstration of the differences between certain countries here. And when I look at e-commerce and put that in perspective, I think some of the sort of startup and entrepreneurs in India would be very happy if there would be a significant improvement as far as processing speed is concerned. On the other side, I'm also looking at China, so to say. I look at the One Belt, One Road project, which I think is in another way really a significant infrastructure contributor, and the amounts of money. I mean, as you mentioned, also the cross-border activities. I believe the participating countries along this ancient and future Silk Road will much depend on this development. Well, last but not least, we have the last question. What is the role of TPOs in strengthening GVC linkages? And I would like to ask our finalists, so to say, if you could please shed a little bit of light on this, Dr. Vinay.
Thank you very much. I think when we talk of GVC, we have to differentiate between the arrived and yet to arrive. I'm replacing the word developed and underdeveloped. Arrived and yet to arrive. It can be on geographical way. There are certain countries which have arrived and there are certain who are yet to arrive. But in the same countries, there are businesses who have arrived, businessmen who are developed, and there are businessmen who are developing. Now these businessmen who are developing, they are young entrepreneurs who didn't know the intricacies of the business, the government policies, the trade promotions, or the trade imbalances. They are just into the business and trying to catch up with the people who are already in the business for 30, 40 years or even generations. Now those who have already arrived within the countries geographically, or the businesses who are already established, successful, for them the role of TPOs is entirely different. But those who are yet to arrive or are on the way is a greater importance. Today, socially, business-wise, we cannot be alone. We have to be together, directly, indirectly. either as a guidance or as a mentor. So those who are yet to arrive, they have to be connected with somebody to have that opportunity to be taken forward, and they have to be aware of things going on. Incidentally, the business scenario presently is changing so fast that what was valid last week could not be or may not be valid next week also. Like we say in IT, there's a pre-Windows 95 era and post-Windows 95 era. And when we talk of post-Windows 95 era, the way things have changed, it is unimaginable. And that improvement has come only because they were not regulated. The growth of IT was not regulated by any country, by any law. It was a free for all. Whosoever is the best, he won. If today WhatsApp is the first #1 chat box, there have been many others, but they could not. When we talk of awareness, to add to the value chain, we have to know what is above or in front of me and what is behind me, whom I am competing with and who is competing with me. Then they have to be open to acceptance, open to adaptation, open to changes, open to even exit if it is not working. Today, the time is not to carry on the deadwood. What used to be cannot be tomorrow. I can just relate you very recent happening of Mumbai city only. Very near from this place, there was a bookstore. For 70 years, it has been there, and this month it is closing. So the businessman is open to exit. What was there for 70 years is not available for even 70 days now. Thereafter, the upgrades. It is more so important, not for the yet to arrive, but for the already arrived businesses. They sometimes feel that what we have been doing, what we have been successful in the past, may continue, will continue, or shall continue. But in today's business environment, it is becoming very difficult to judge whether tomorrow the same business, same service, same trade, or whatever is being done today is going to be remaining. So upgradation is more important. Keeping pace with the time, change in technology, changes in the laws, not only within the country from where you are working, but from the around you. As we see today, something happens in North America, it affects the entire world, it affects the businesses. Around this entire thing, what I have said, the TPOs will play a role, holding hand, guiding, showing the path, and the people who are in the business, who are running their entrepreneurs, entrepreneurship or have to add to the GVC have to be open, holding any hand which helps them. Thank you very much.
Vinay, thank you very much for this contribution. I have to say, and that's really not a particularly smart comment, but regarding your Windows comment, that's why I'm a dedicated Mac user of the Apple world. But I think it's very clear, to recognize that there is differences in the development levels that we see around the world. At the same time, you better know your competition or the other players around yourself very well. I think Nadim just had one little contribution to it.
Your comments reminded me of it's an anecdote of sorts, of a discussion I had, I think about 4 years ago in the UK. There was an event basically on trade and investment, and there was the UK Export Promotion Agency was there. And what was interesting about that is that they were talking at the time about looking at, for example, at how they can improve the performance of exporting firms. And so immediately, of course, it's very easy to say, well, actually, it's about improving the performance of exports, and so you need to look at how you can improve the capacity of upstream suppliers as much as it is about just targeting the exporting firms. So that was one part, if you want, of the evolving new narrative that GVCs have helped us basically see. But the other interesting aspect of this, and this comes back to Rupert's point about the fact that we need to move away from this view that we're looking at trade in gross terms, and we have to look at trade in value-added terms, and the benefits of trade in value-added terms. Today we had a few references. I think even you, Christian, mentioned that 40% of GDP is trade, and of course that's to some extent misleading because it's a gross figure divided by, if you want, a net figure of sorts. And so the focus is looking at value added. And so this chap from the UK Export Promotion Agency said that by 2020, the UK target was to have $1 trillion worth of exports. And I said, what does that mean? What does it mean in terms of value being generated in the economy? And he looked at me with his eyes glazing over, thinking, what are you talking about? And I said, well, $1 trillion of exports could be generated by, if you want, having just a very low part of production at the end of a long value chain where the imports are being sucked in. That's not a good policy. If you want to have $1 trillion worth of value-added exports, that's a meaningful policy. And that policy focus allows you to start thinking about global value chains in the right way. It means that you focus on the upstream firms as much as the downstream firms. But looking at these things through a different prism takes you to, if you want, bad places with flawed policies.
What I learned, never argue with a statistician. Andrew, you also had just a couple of words to contribute.
Just a brief thing. I think many of you are familiar with the data that eBay has generated. So I'm not advocating for eBay. eBay is a platform. But what's interesting about eBay is that they've shown this data about firms that trade. These are firms who are on their platform with more than $10,000 worth of trade. So these are really small businesses. And what they've shown for a number of countries, is something like 30 countries, that the persistence of the ability of these small firms to engage in international trade on multiple countries is incredibly high. It's up in the 80-90% level versus those who are offline, which is down at like 2 or 5% level. So the point is, they are doing it without actually any additional enabling rules. They have created some additionally enabling features like dispute settlement and payment. These are things that can be promoted at a national level, and they can also be promoted at an international level. But if you want to imagine what can be done, this is very significant. If you can shift from a population that almost doesn't trade to a population that trades by definition, this is a radical change. I really want you to communicate what is possible with these initiatives that are taken here and in the international forum where you're negotiating.
Thank you very much, Andrew. Since we have now a couple minutes left, wondering whether to break the problem of the organizer. I have seen quite a number of participants in the audience really closely following what we were discussing, and I was just wondering, would we have a spare microphone if there's really interest, of course, from the audience for a question. We would be very happy if you would see maybe interest, one or two or three of you with a question, please. Well, I see the cameraman raising his hand, but it's probably the wrong signal for us. Over here we have a gentleman right in the front row. Please, if you could just introduce yourself briefly, who you are and which organization you work for.
Thank you for the World Trade Center for arranging an event with global value chain and team of the countries accordingly. I really appreciated all of the efforts, highly appreciated all of the efforts, and our question is how we can proceed. Our industries are Srimati Group of Industries, Kolhapur. We are manufacturing the castings with machining for Aerostar, JCB, Kinetic, Kirloskar oil engine and other customers. We are having the questions how we can get entry into the export market with the support from against MSC fundings.
Thank you so much. Maybe one more question, the gentleman right in front of you.
Hi, I'm Litesh Majetia from Bank of Baroda. My question specifically to Dr. Rupa Chanda, since you're on the RBI. We've seen that we finance a lot of MSME, right? And we have to price them a little higher, or rather much higher, because the cost of capital is higher for the ratings. Because the rating agencies view them from the same light as they view from a large corporate. While there have been discussions with RBI and myself specifically involved in some of these discussions, but nothing concrete has come out really. And we need to design this very effectively so that these advantages can be passed on to MSME. And that is where the acceleration of growth can actually augment these MSMEs. So your thoughts on that? Yeah.
Thank you. Rupa, if you don't mind, I would like to start with you.
Let me just tell you about a study that we did looking at firm level data for MSMEs along with a doctoral student of mine, and we looked at the CMIA prowess information. And what we found is credit constraints are the biggest challenge affecting the productivity growth of firms. So, and trade liberalization for those firms which are more credit constrained has had more of a negative impact. So MSMEs in general have been hurt by trade liberalization, and those with financial constraints are more affected. So clearly access to credit is an issue. Of course, as we know, the RBI has been working on ways of bringing in more transparency on the cost of funds and so on. But again, the fact that you're always going to have spreads over whether it's an external benchmark, internal benchmark, etc. So that opaqueness will not go away, I think, for MSMEs. That means you have to really find alternate sources of funding. It cannot be just to the traditional bank lending sort of scheme. Now, I know in this budget, one of the ideas was by reducing the tax rate, and hopefully that would give more sort of surplus funds for the MSMEs to reinvest back. So the tax regime tweaking is one part, but I personally do not think that moving around too much with tax rates, that also creates a lot of unpredictability. What could be other sources? Is it possible to look at other sorts of bond financing or things which are specially geared towards a class of borrowers? That could be one way. Again, I'm not a proponent of priority sector and that sort of forced lending given the current environment with stressed balance sheets of banks. So frankly speaking, and you can't open up the external borrowing part because the exchange rate risk and the credit worthiness is not there. So really there isn't much more scope except, this is in my view, of creating a sort of a set of investment instruments which could then, be used to raise funds by the MSME segment. But who would take those instruments? Again, it comes back to the same thing. So developing a much more deeper bond market is one of the ways I would suggest. But
actually, my request was more from looking at rating agencies having rating parameters different for MSME, which should be approved by RBI and Government of India.
Yes.
And that's where the criticality is, I think.
But I don't know to, at this current juncture, bringing in a different sort of rating parameter, given that there's already been problem with the large corporates also having a problem in repaying. Looking forward, yes, but I think currently that's not going to fly at all. I have to be very realistic.
On the rating agencies, I'm sorry to use a word. In India, it is an organized fraud. And I can make a statement on public place here as well as others also. It is a fraud in collusion with financial institutions where a systematic way is adopted to rate the entrepreneurs, particularly the MSMEs, at lower level, and then they are offered guidance how to go up in the rating, charge for that, and then raise their rating, and in between the financial institution enjoys the higher rate of interest at the cost of helpless MSME. In my subject, I had mentioned that we have to be aware of, we have to be open, and if MSME is not open, aware and adopt, then they fall victim. It is very unfortunate, and I can say if there is anybody from media here, they can quote me. I'm ready to be prosecuted for that. And I have the proof. I have the proof to say it is an organized fraud. And I'm taking up myself also with various organizations, and we need to fight this out and force SEBI and RBI to declare laws, system and procedure. See, for anything and everything, SEBI comes out with a procedure. But this being an organized crime, nothing has been come. Thank you.
Thank you very much. Yeah. And, Nadim.
Just as a quick follow-up to your question, I think I wanted to alert the audience to two publications of the OECD that perhaps will answer your question much better than I can. One of them is basically a publication which we call SME Financing, which provides a whole list of policy recommendations about improving financing for SMEs. Another publication is one that we did jointly with the World Bank in 2016, which was a report to the G20, which was looking at better integration, funnily enough, of SMEs within GVCs. And one of the recommendations in that second report was about trying to change, if you want, the mentality of banks when it came to lending to SMEs. I mean, part of the difficulty with lending is that quite often SMEs don't have, if you want, the full panoply of balance sheets that will allow them to have access. And so there was a push to have a raised awareness in banks that maybe they need to be more flexible in the way that they monitor the risk assessment of SMEs. That's certainly one of the recommendations. Another recommendation that comes through from our broad stream of work on SMEs is the creation, if you want, of SME microfinance banks, or microfinance banks more generally. We see those being successful in many countries, often, if you want, government-owned and government-run, but still profit-making, where, again, the risk assessment is slightly different from the view of a conventional bank, because actually the government has got a role in making sure that it's about looking for long-term growth potential in a slightly different way to the risk assessment that you might get in a private bank.
Thank you very much. Well, in the interest of time, the first question I may ask you, sir, if you direct or approach one of the panelists directly. Well, that brings me to the end of the session, and I certainly hope we will not see you prosecuted in any way. I think you will have the relevant details to stand up for this. Well, I really would like to thank our esteemed panelists here really for a very interesting and insightful conversation this afternoon. I think what is clear is that we need to promote open trade, and we need to fight protectionism wherever we can, because it really would only cause a further threat to global value chains the way we see, as I already mentioned on the outside this morning, unfortunately, even among the G20 countries, we see a tremendous increase in protectionistic measures being implemented, being certainly a concern for the global retail sector. GVCs require a high degree of openness and fluidity, and it's in this context that I would like to use the opportunity one more time really to sort of encourage the Indian government as well as the European Union and the European Commission to seriously think about how our trade negotiations on the free trade agreement can be sort of revived. Well, at the end, I really would like you to join us in a round of applause for our fantastic panelists, and I really thank you for your attention.
Thank you. That was indeed an engaging and enlightening session, and I'm sure you all will agree with me. Please stay back for a couple of moments with us as we felicitate some outstanding companies for their excellent performance in the MSME sector. I request Madam Nirupa Naik, Senior Director WTC Mumbai, to please do us the honors. We have given away a few awards in the earlier session as well, and we will be giving away more awards during the day and even tomorrow. So the first of the session goes to Endris Plus Hossa India Automation Instrumentation Private Limited, awardee under the category Manufacturing. And we have Mr. Samir Tamboli, Assistant General Manager Marketing, to receive this award. Endris Plus Hossa India Automation Instrumentation Private Limited is a wholly owned subsidiary of Endris Plus Hossa SE Plus Company K. The company set up its manufacturing facility in Aurangabad, Maharashtra in May 2007 and started commercial production from October 2008. The company manufactures and exports level and pressure measuring instruments used in petrochemicals, food and beverages, oil and gas, waste and waste power, and energy. Congratulations to you. Thank you, Kristen, for joining in while presenting the award. I would request Madam Rupa to stay back and Kristen to join in for presentation of the next award as well. Container Corporation of India Limited, awardee under the category Services, and we have Mr. A.K. Singh, General Manager, Western Region, to receive the award. Since 1989, Container Corporation of India has been offering responsive, cost-effective and reliable multimodal logistics solution exporters, importers and domestic traders in the country. In the last 3 years, the company has been catering to around 55,600 exporters and importers across the country per year. Heartiest congratulations to you and your team. The next award, Bank of Baroda, awardee under the category Finance. And we have Mr. Nitesh Majitia, Senior Vice President and Head Supply Chain Finance, and Mr. Suresh Kha, General Manager and Head IT, to receive this award. Bank of Baroda launched a best-in-class sophisticated digital supply chain finance system to offer superior financing solutions for small and medium enterprises on 5th September 2017. The digital platform went live in a record implementation time in history of Indian banking. Congratulations to you. Thank you, Rupa ma'am. The expert panel, please remain on stage for another moment for a group picture.